The dollar continued to be the strongest major currency last week while the euro was the center of attention. Inconclusive elections in Italy left the country with a hung parliament and possibly with much political uncertainties for months that would hamper reforms. Solid bond auctions in Italy gave the common currency some interim support, but it finally gave up again with euro-US dollar briefly breaching the key psychological level of 1.3. The situation in the euro reminded us how vulnerable the confidence towards the Eurozone is despite all the efforts by the European Central Bank and political leaders. We could look at euro-Swiss franc, which was back below 1.21 at the start of 2013, then shot up to as high as 1.2568 and was hammered back to as low as 1.2118 within just 2 months. While the US was troubled by the so-called sequestration, the dollar was not that affected based on its safe haven status. The dollar index surged through 82 to close at 82.28, while US stocks managed to reverse earlier loss and close on a strong note. To recap some of last week's events, in the US the Senate rejected a pair of partisan proposals to replace the spending cuts and no congressional action is planned before those cuts take effect. And as usual, the politicians traded blames on each other for the impasse. The Congressional Budget Office expected that this would reduce U.S. growth this year by as much as 0.6%. In the testimony before the Senate Committee, Fed Chairman Ben Bernanke discussed the benefits and costs of the central bank's asset purchases. His overall tone remained rather dovish and he downplayed the costs of the program. Despite debates over whether the Fed should taper asset purchases, the testimony showed no indication that the Fed will slow down or stop monetary easing. Meanwhile, Bernanke's comments on the economic outlook were similar to those made in his press conference following the December Federal Open Market Committee meeting. In the Eurozone, focus was on the inconclusive election in Italy. Bersani's party won majority in the lower house but failed to do so in the upper house. Italian yields were sent to a 3-month high on political uncertainties. Bersani said he would not form a coalition with Berlusconi, but instead he's prepared to compromise with Grillo's party. Berlusconi called for new elections instead. So far, markets are still unclear on what will happen next in Italy, and it will remain the focus. European Central Bank President Draghi said that the Eurozone economy is still weak, but he's optimistic that the accommodative monetary policy would help drive a gradual recovery in 2013. He also expects that the central bank would not remove policy stimulus anytime soon, as inflation would significantly undershoot its 2% target in 2014. Meanwhile, he said that the benefits of the painful actions of austerity have not yet materialized and the economic adjustment is coming at a heavy social cost. But he emphasized that austerity is for their own benefits, and urged that reforms must continue. This was somewhat an indirect response to the inconclusive elections in Italy. In Japan, Prime Minister Abe formally nominated Asian Development Bank President Kuroda as the next Bank of Japan governor to succeed Shirakawa. Iwata, a professor, and Nakazo, a Bank of Japan executive director, were nominated as deputy governors. The Japanese yen weakened mildly towards the end of the week on expectation that the team of Kuroda will pursue aggressive easing when they come on board. And there would be eye-catching measures like buying risk assets or bonds on a large scale. But it should be noted that the yen could have exhausted selling in near term, and we expect more consolidation ahead in March and probably before Kuroda's first Bank of Japan meeting in April. The sterling extended its recent decline on Moody's downgrade as well as weak economic data. Manufacturing Purchasing Managers Index dropped sharply to 47.9 in February, down from 50.8. The contractionary reading was a shock to economists, as it was generally expected there would be a mild expansionary reading of 51. And it raised the concern that UK cannot avoid the so-called triple-dip recession. In China,